I've been talking about investment in the last couple of videos, and in this video I'm going to be sharing with you my investment journey over the last 15 years. Coming up, what is going on? My name is Ramesh. Welcome to another video on Mudgal's Musings, a channel dedicated to increasing your productivity. If this happens to be your first time here, do consider subscribing because I keep posting one interesting video every single week. And don't forget to hit that bell button because you will get notified every time I upload a new video. So let me begin with the beginning of my career. In the year 1996, when I started my career as a teacher, I didn't have much of a savings per se. So the question of savings, the salary itself was very limited. So as a result of that, the savings itself was quite limited. It was a month to month kind of living, getting the salary, spending it out on meeting the expenses. So the question of savings in the first few years was absolutely not there at all. I just somehow managed the things, was probably able to save very little amount of money, and the question of investment in any instrument was out of the question completely. Fast forward a little bit, so somewhere around 2000 when I came to Bangalore, I joined an institution, a residential school on the outskirts of Bangalore, and that was a place, it was a boarding school, and there I was able to save a little bit of money, and as a result of that, in fact, I also reached a stage where, according to the tax rules of that particular stage, around 2000 to 2003, I was expected to show some savings so that I could save some taxes. So from then on, my investment or my savings journey began. I bought LIC policies. It was like it was insured for about 1 lakh rupees, and there was about 15 to 20,000 rupees of an investment in that. Over a period of 1 full year, and that was my first investment. In 2004, I got promoted and went to Bilaspur, and in Bilaspur I started a job as a vice principal over there in one of the schools, and then the very next year I got promoted. So it was a time when there was a little bit of an increase in my monthly income, and the salary of course increased. As a result of that, my tax liability also increased. And in order to save taxes, I started buying some more LIC policies between 2005 and 2008. Now, it was also a period, again, mainly from the point of view of saving taxes. I also took home loan and started constructing our house in Bengaluru. And in fact, that was one major investment, I could say, from the real estate perspective. 2007 to 2012 was a period in which I was busy repaying the loan that I had taken from the bank to construct the house, and of course a bit of investment in terms of LIC policies continued over there. I hadn't ventured into the stock market, I hadn't ventured into mutual funds, I hadn't explored any other investment instruments at all until 2013. It was in 2013 that I returned to Bangalore from Singapore, and then that was the time I started working in Whitefield, and that's also the time when I started thinking that yes, it was time for me to explore some more instruments for investment, because there was a steady flow of income. I was able to put aside a certain amount of money. Savings was also decent, so then I started exploring. So in 2013 I invested in about 3 to 4, I think it was 4 mutual funds. That was the first mutual fund investment of my life. In 2004 I invested in 2 instruments in lump sum amount, and in 2 I started systematic investment plan of 5,000 rupees. And these 4 I was able to most of them were kind of limited period investments. So after about 4 years and 5 years, I was able to redeem the investment in these instruments, the mutual fund instruments, and I did make an excellent profit out of it. 2014 was a bold and courageous year for me. That was the year when I opened my Demat account, when I opened my trading account with HDFC Securities Limited. Of course, their brokerage charges were quite high, but still, I was starting it for the first time, and that HDFC Bank and HDFC Securities, their demat account and stuff like that were pretty good. My account was also with HDFC Bank. So as a result of that, I decided to open the trading account with HDFC Securities, and I did invest in some direct stocks. All right, so at that point of time I had become subscriber for Equity Masters, one stock, kind of a stock and share kind of a advisory services, though they claim very clearly that they're not SEBI certified financial planners or advisors, but they do make some recommendations with respect to certain stocks. Of course, they leave the responsibility of actually choosing to invest in those stocks with the investors and the subscribers themselves, and all the risks associated with any of these stock investments would finally rest with the investors themselves. So I did make some investments, and of course a couple of stocks didn't do really well, but three other stocks in which I had invested over a period of about 3 years, they gave me handsome profit of at least about 22 to 28%. So which kind of balanced out the money that I was losing in two other stocks that weren't kind of growing up, that weren't appreciating in price. So that was actually a good lesson. I wouldn't actually consider that period as a very sound and systematic investment plan as such. I had certain money I wanted to kind of try out, so even if I had lost that money, it wouldn't hurt me much. But with that journey, there was a bit of a learning as well, and I took that learning in good stead. The next phase of investment came in 2019 when I was in Dubai, UAE. It was the time when I had explored some of the online investment platforms, especially the direct mutual fund platforms. I opened an account with Goldwise, which was earlier it was called Goldwise. Now later on it came to be called Neo Money. So on Neo Money, since there was a certain amount of money that I could actually invest in mutual funds, in fact, the beauty of this Neo Money or many of those things are depending on the goals. They recommend what kind of mutual funds that you need to be investing in. Of course, the risk factor also matters in over here. So based on the data and the inputs that you would have given, Neo Money suggests the kind of funds that you should be investing in, and depending on your time horizon also. So I had a substantial investment, and we all know in 2020 the entire world shook. There came the COVID-19 and the stock market tanked completely. That was a very scary moment of a few months from early 2020 to mid 2020. The value of my investment in these mutual funds went down to almost 46%. It was just about 55 to 54% that the value of my money that I had invested. That was very scary moment. A lot of people were actually pulling out the money from the market. They were redeeming their investments in mutual funds. Those who owned stocks, because of the stock market crash in March 2020, people sold a lot of stocks and stuff like that, and they exited the market at a time when the market was down, which means many people who had invested, they didn't have the courage to stomach or probably wait it out a little bit. So they exited and they made losses out of that exercise. However, I knew that perhaps the situation would improve, that the world could not be in that kind of a situation forever. The economic lockdown things and seal down things and all would not continue forever, because the world had to come back to normalcy at some point of time, which is what happened in the later months. As a result of that, the market picked up the momentum, economic activity started happening again, people came back to work, goods started being sold and companies regained, market got re-energized, a lot of people started investing back into the market. And as a result of that, the value of the mutual fund investments also appreciated. And eventually, when I redeemed my mutual fund investments in 2021, after I came back to India in the month of June, I made a handsome profit, about 27% on my investments, just over a period of about 18 months, or perhaps even less than 18 months. So that's another lesson that I've learned over the investment strategy. And what most importantly signifies is that We need to have patience with the market and let the market play out. Fast forward to 2021. From the time I landed in Bangalore in 2021 in the month of June, I have been learning a lot about stock market. I have been learning a lot about mutual funds. I have been learning a lot about the different variety of investment options available. Some are for short term, some are for long term, some are for medium term. Some are very, very aggressive and risky. Some are a balance, that there are debt funds, and then there are equity funds, and then there is a hybrid fund. So all kinds of things with respect to the financial market. Most of it is linked to the stock market, obviously, because it is the stock market which gives inflation beating returns. In the past also it has given inflation beating returns. It is likely that the money invested in stock market, in directly or indirectly through mutual funds or through small cases, is likely to give a much better return than maybe a fixed deposit in bank, because that used to be the most favored instrument of investment for people, because there was security. However, security is not the only factor that we should be considering these days, because we know that the returns that we are going to get from a fixed deposit are not going to support us in the long run, because inflation is going to eat out the returns that we are getting. So in fact, it will all turn into a negative returns. So we have to find some instruments which are going to support us in the long term. Especially we need to kind of have the patience to let the money compound, let the investment compound. And in the stock market or in mutual fund investments, that is what happens when we choose some wisely, of course, after doing a lot of research and after finding out our own analysis of the instrument that we are doing in. Choose the right kind of instrument, stay invested in it for at least about 3 to 5 years horizon, and it is highly likely that the returns that we are going to get from such an investment over a period of 3 to 5 years is definitely going to be much higher than what we are going to get from fixed deposits or other conventional investment instruments. So what is your investment journey? What are your investment instruments? Do share them in the comment section below. Let all of us know. You don't have to mention the amount that you are investing, but at least you can mention the instrument that you are investing in. So each one of us can learn from each other and we can make our money work better for us. That's all on Mudgal's Music this week. Thanks for watching this video. Like it if you like it, and do share the video among your friends and acquaintances, just in case they might also be interested in videos like this. Till I see you next time, have a wonderful time ahead. Stay safe, stay healthy, and do take care of yourselves. Bye bye.